Hello. Today we introduce a new topic called financial documents and tariff systems. Now, this new topic comes in, or the new chapter comes in, now that we are done or we have finished the correction of our new tests or the tests that we just did recently. So now we want to move on to a new topic, which is financial documents and tariff systems. It's a fairly common topic or common chapter, which will, always appear in your exam. And so you need to follow this carefully up to the end. It's also based on, the expenses that we face every day. The things that we buy technically every day or at least every month. And so when we talk of financial documents and tariff systems, it's supposed to help us understand, the things about our finances that we handle every day. Okay? And so in the introduction and key concept, financial documents and tariff systems often occurs in the context of personal and household finance. Very much like saying every person basically on a daily basis or weekly basis or monthly basis, there are things you spend money on. There are things you cannot do without. There are things you buy almost every day for personal use. There are things you buy for the whole house as a household. Okay? Like if you had a family, if you are married, you had a family, then there are things you buy for the family. Sometimes you buy every day, sometimes you buy every week. These things that you buy for the whole family is called household expenses. And understanding household expenses is very important, and it's what we would like to look at as household finance. Now, for personal finance or personal expenses, these are like some of the things that you normally buy for personal use. It's not for the whole family, it's for a personal use. Things like airtime, for your phone, things like data for your phone. Those are personal expenses, and we study that under personal finance. Now, you may pay a monthly amount of money for your cell phone account, okay? Now, if you're paying a monthly amount of money for the cell phone account, then that is called a personal expense because it is your cell phone, it is your telephone. And because it is your telephone, what you are doing is you are paying for a personal expense. You are catering for a personal expense. You're paying for something that you use as a person. Now, your parents may pay a monthly amount of money for the electricity used by the household. Okay? So your parent is paying monthly amount of money. And that monthly amount of money, which is paid for the electricity used, it's paid for the whole house. Okay? It's not like he's paying it and he's the only one using the electricity. No. For the household, the electricity connected to the whole house, when your parents pays for the bill, that is called the household expense. Okay? Now, sometimes you receive a tail slip, or most time after buying something, say from Spar or ShopRite or Checkers or anywhere. When you buy something, you receive a tail slip. Okay? Now, this tail slip that you receive from the store or after purchasing something is also called an expense, or it's after paying for something. You may also receive a monthly account that you need to pay off. Now, understanding how these documents and the systems work, like how you have to pay for cell phone bills, how you have to pay electricity for the house, how you have to buy grocery, how you have to pay, some monthly fees for something of the house, say electricity. These systems, the payments, or understanding how these documents and the systems work and how to manage them is very important, okay? Especially in managing your personal finances. Now, in this chapter of financial documents and tariff systems, by the end, we would like to have a proper understanding, or at least we will have learned about the financial documents relating to personal and household finances. Okay, the financial documents, as I indicated earlier on, tail slip is one of them. Okay, tail slip is the ticket that you receive after paying something or paying for something. When you pay, for example, for electricity, or you pay for something from Spar or ShopRite, or after paying for grocery, they give you a tail slip. That is one of the things that we call a financial document. Okay, so by the end of this chapter, we should be having a proper understanding of financial documents relating to personal, that is documents for a person, and also household finance, that is documents for the whole house. Okay, now this one will include electricity, water bill, payphones, tail slips, and account statements. You should, or at least we will have also learned about of what different items and amounts on these bills and statements represent. Okay, for example, after going to buy grocery, there are a list of items which is going to be on your till slip. Okay, so now you should be having a proper understanding of what these different items and the amounts represent. Okay, you will find a lot of items, and we will be seeing in some of the examples which will be coming up, we will be seeing some of those different items. So by the end of this chapter, you should be able to understand what those different items represent, and also what the amounts represent, that is the bills, and how different values are also determined. You know, how, for example, is the price of the thing, say a kilogram of chicken, being determined, and stuffs like that. So we will also be looking at that. And also, by the end of the chapter, we will have learned about tariff systems, okay, including municipal tariff for electricity. That is, you know, most houses here in South Africa, at least most houses have got electricity in them. They have got water readily available, you know, security provided, waste disposal, and things like that. So now with the tariff systems, including municipal tariff for electricity, water, and sewage, telephone tariffs, and transport for buses and taxis and trains like that. So we will also have learned a better, or have understood how better the tariff systems works, and how the municipal place the tariff on us. Then also how to calculate them, that is how to calculate costs using given tariffs, and to draw graphs of tariff systems. Okay, so these are some of the things that we will learn through this chapter. So now that we have seen what we will go through, we will then have to look at some of the terms that we will be using in what? In the discussion of these financial documents and the what? And the tariff systems. What are some of the terms which we are going to be using in our discussion? What are some of those terms? Now, one of the terms that will appear immediately in our discussion, and as you had already seen, these terms of the bills, the tariff, and the what. These terms will obviously appear, and as they appear, we will want to know what they actually mean. What do these terms mean? Okay, so we will be getting to that right away. And now, so the terms that we will be looking at includes bills, credit, debit, debt, municipal bills. Now, when we talk of bills, we are simply referring to a document which indicates the items that you have purchased or the services you have bought. Now, also in the same document, you will be having the amount of money that you are yet to pay in case you had not paid all the money which is required. Okay? Now, that is what we call bills. And there are so many things that, that add up to form a bill. Because, for example, when you think of a household, then you will want to think of electricity, you will want to think of water, you will want to think of, the waste which is disposed, which is normally taken by the municipal. They also charge for that. All those items added together and put on a document, and the amount of money which is charged for each gives what we call the bills. Now, the next term that we want to look at is called the credit. Now, credit represents the amount which is paid to an account. For example, if you go and put some money in your account, or if someone deposits some money in your account, it's called a credit. The exact opposite of that is called a debit. A debit means money have been removed from an account. That is called a debit. Now, a debit can be because you have purchased something, okay? Or maybe you made a transfer of money to some other account. So if you remove some money from one account to the other account, the account where you have removed the money is described using the word a debit. But when you deposit money there, we call it a credit. So now the next thing we want to look at is called debt. Debt is the money that you have to pay, for a service or for some kind of a good that you have purchased or for some services that you have received. That amount of money that you are yet to pay is called a debt. Sometimes it's because you have borrowed physical money. So if you borrow some money from a friend, then you have to pay them back. That amount of money or that money you have to pay back is called the debt. Then now the municipal bill, this is one of the bills that we also be looking at shortly. Now the municipal bill is due to the services offered by the municipality or by the local government. The local government will ensure that you do have electricity. The local government will ensure that you do have water. The local government or the municipality will also ensure they come and pick the waste disposal. That is, after using something, eating and stuff like that, cleaning the house, the waste which is taken out and disposed in their container so that the municipality with the car will come and take that. Those plus other services offered by the municipality are not for free. They are normally charged. And when they are charged, you pay money, and that contributes to what we call the municipality or municipal bills. Okay? So these are a few of the terms that starts our discussion of financial documents and tariff systems. Now, the next thing we want to look at is a worked example. How do we deal with this type of thing? Remember, we had seen that as we will be having this discussion, at least by the end of the chapter, we should be having, or we should have learned financial documents relating to personal and household finances, including electricity bill, water bill, phone bills, till slips, and account statements. Also, we will have learned about the different or what different items and amounts are on this, what we call the bills and the statements, or what the statement represents, how these values are determined. The tariffs, including municipal bills for electricity, water, sewage, telephone, and stuff like that. Okay, so let's see that using a worked example, and we see how we can maneuver, how we can get through that. Now, with a worked example, we have a question here. Now, this is one question which is appearing from the bill that was received by someone. So the question here, just let me write the introduction first. The introduction of this question is coming from this material. Just get the question typed rather. All right, yes. So there we go. Now that I've copied, I can go ahead to put it right there so that we have where to start from. All right, so this is the statement for the introduction. That look at the municipal bill below. Okay, look at the municipal bill below. Then answer the questions that follow. Yes. So the bill is given right here below. This is the bill right there. And this is the introduction statement that we have to look at the bill. This is the municipal bill. And then afterward, we have to answer the questions that follow. And so this is our bill, you know, having a lot of this information, the address, the tax invoice number, the customer VAT registration number, account number, distribution code, business partner number, the name or address of the person receiving this bill, then the telephone, rather the address. Here is the address of the municipality. Then in this box here, we have the details of the transaction. That is the details of what the municipality has been supplying and how it was paid for. So here we have previous account balance. Okay. Then here, less payment on the 29th of September 2013, given here. Arrears payable immediately, given here. Last account, see overlap right here. Then we also have current amount, DUB, right here, and the total right there. Here also, the total liability right here. Yes. And what else? Well, some additional pieces of information here. Some important thing for you to remember right here. Payment at City of Cape Town cash office or the following. Okay, so that means you can pay at any City of Cape Town cash office or any of the following: Absa, Checkers, Shoprite, Post Office. All right, so there we go. Account number for the person who is receiving this bill, Mrs. J. Gwai. Account number, amount due if not paid in cash, amount due if paid in cash. Okay, you know, sometimes you don't pay in cash, like you use your credit card to pay. So if you're using your credit card to pay, then this is the amount of money to pay, 2,076.72. But if you're using cash in pay, you pay 2,076.70. So rounded down, amount carried forward to next invoice is 0.02 rand. So this is the amount of money that will be carried forward if you pay in cash. All right, that's the full information. Now, where are the questions? Well, let me extract the question right away and get it posted also. So these are the questions. Right up to here that we have to copy. Then later, we put onto our page where we are solving the questions. Yes. So here we go. These are the questions. Out of it. So there we go. Now, this is the municipality bill right here. Then, apart from the bill, we also have questions requiring our attention. Now, the first question here is, the first question being, Mrs. Gwai received the amount municipal, rather, Mrs. Gwai received the above municipal invoice for electricity and refused. Okay, so she received this municipal invoice. Notice that a bill can also be referred to as an invoice. So she received this bill or this invoice from the above municipal, which is Cape Town, and then she refused. The first question is, what is her address? Okay, what is her address, including the city that she lives in? What is the address? Well, we get back to this and we look for what? Where her address is. Now, notice while we begin to follow this, the thing we look at is there is one address here. Now, this address here is the address for the municipality. These are some additional pieces of information about what? About the municipality also. Then now here is the name of the person receiving the invoice. After the name, you immediately see the what? The address, okay? This is the address of the person. This address here is for the municipality. This address is for the person receiving the what? Receiving the bill. She is called Mrs. J. Gwai. And so, what is the address of the municipality? Well, this address includes the city of Cape Town in its address. And so this address must be coming from Cape Town to this address. And so question 1, part 1.1, question 1. So we will start with the part 1, the address of this lady. What's her address? Well, the address is right there. So we say part 1.1, or we could say part A. Her address is here, 145 Gordon Avenue, Mowbray. So we write that down. 145 Gordon Avenue. Okay, we could use lowercase. There is no problem with that. Gordon Avenue. Mowbray. 7 what? 7 8 5 3. Yes, that's her address. Then the next question, all right, this is city of what? City of Cape Town. Yes. Then the next question is question 1 part 2. What is question 1 part 2 saying? Well, question 1 part 2 is asking for her account number. All right, so we get back to this and we look for the account number. This is the city address, the city detail. Okay, this is the city detail where money can be deposited, where the tax invoice, like the tax invoice number, and the customer VAT registration and distribution code, like that city address. All right, we keep searching for the account number for this lady. All right, here we have her address. We look down here, there isn't. Even here, we don't have an account number. Then we move to this, and we have, yes, again here, her name, Mrs. J. Gwai, account number here. Well, so we want to put this account number down. Account number, which is, well, we could have also taken it from here, right here. But let's take this one where her name is much safer. So we say the account number is 634812459. Yes, this is her account number. Okay, this is the account number for this lady. And now that we have got the account number, the next thing we want to look at is question 1 part 3. At which 4 stores or outlets can she pay this invoice? Okay, so the question now is where the payment can be made. Well, notice that the payment can be made at Absa, given here, Checkers. Okay, so we'll be like, we have Absa, then the next is what? Checkers. Then after that, we have ShopRite. Then after ShopRite, we have Post Office. Yes, these are the 4 outlets where the payment can be made. Now, the next question is, if Mrs. Y wants to query this bill, if she has got a question, if she wants to make an inquiry about this bill, what number should she use? Well, the telephone number that she has got to use is going to be the phone number of the person who has sent this invoice or this bill. And this person is the municipal of the city of what? Of Cape Town. And so we will now have to look for the address for the city of Cape Town. And that is where we will do what? Find the telephone number or the telephone number that she can call. Here we go. So we have the telephone number here. And the telephone number being what? Being 0. Well, the telephone number being 086 010 3090. Is it 3089 instead? 89, yes. That's the telephone number. Okay, that's the telephone number that she can use in case she has got a question to ask. Now, the next question is question 2. So question 2 is asking for if, according to the bill, according to the bill, when last did Mrs. Gwai make payment or a payment to the municipality? So we are going to come and check from the bill the last time when the payment was made, okay? Now here, the issue of bills. So when was the last time she made a payment? That is question 2, part 1. The last time she made the payment, well, let's check. So here we don't have any date. And so we move down here where the detail of the transaction is. So here, account summary as of the 23rd of what? August 2013. Due date is here. Okay. Well, last payment. Okay, this is less payments. We have this. Okay. All right. Now, when you look at what we have here, you notice this was supposed to be the payment that was received. Okay, this payment was, there is a payment referred to here as less payments, and it's made on the 29th of July 2017. Okay, and so what is that supposed to mean? Now, notice that normally the municipality will bring in the concept of bills on a monthly basis, okay? The municipality will not bring a bill on a weekly basis. The municipality will always bring a bill based on what? Based on a monthly basis. And so when we look at that period of time, we soon notice that the thing we want to deal with at this moment in time is indicated there. And so when we look at this quite closely and carefully, you notice that this period here, this one possibly was supposed to have been last payments. There was an issue with the typing. This was supposed to be last payments, so that we would have this as our last period or the last time the payment was made. And so the last time payment was made, last payment made when? On the 29th of what? Of July. 29th of July. When was that? 2013. So this was the time period when the last payment was made. Now the next question, which is question 2.1. Question 2.1 is going to be our next question. Question 2.1, rather question 2 part, question 2 part 2.2 this time, yes. Part 2.2 right away. So now the next question, which is question 2.2, what is it asking for? Well, let's check and see what it's asking for. So question 2, how much was her last payment? How much was her last payment? So we get back to the what? To the invoice, and we see how much was the last payment. Now notice last payment was made on the 29th of what? Of July. How much was the last payment? It was 349 0.67. So to get back to the question, the last amount of money paid, okay? How much was her last payment? So we say the last payment was run 349 here, 349 point what? 67. Yes. Now, next question is question 2.3. Now, question 2.3, let's see what it's asking for. Right here, if Mrs. Guai receives the invoice on the 10th of September 2013, what is the minimum amount that she needs to pay immediately? Okay, so this is the 10th of September 2013. Let's go and see where the 10th of September 2013 is. Okay. The 10th of September 2013. Do we have that duration of time somewhere here? The 10th of September 2013. Well, here we have the 27th. All right, we start with this. Here we have the 23rd of August, the 19th of September. All right, then now here we have last payment on the 19th, 29th of July. Then we also have the latest account. Then we have the current amount payable by when? Payable by the 19th of September. The question being asked is the 10th of September. This is the 19th of December. Okay, so we have got to read this question again and we get a better deal of it. What is the minimum amount that she needs to pay immediately if she had received the invoice, or if she receives the invoice on the 10th of September? Now, on the 10th of September, the money that she needs to pay is the money which is indicated here, payable immediately. Okay? This is the amount of money that she needs to pay immediately. Then now, for the 19th of September, that is an extended period of time. That is some time ahead. And so, before this time, the amount of money which needs to be paid immediately is 1,683. So we say the immediate payment would be what? Would be 1,683. Yes, that would be the immediate payment that she needs to pay. Then now we can look at the next question, possibly 2.4. Well, now question 2.4, it's right here. Oh, no, is this 2.4? Yes, let's just call it 2.4. What additional amount? This is 2.3.1. Then this is 2.3.2. 2.3.2. Yes. So 3.2.3.2, what additional amount must she pay before the 19th? So we get back here and we see the additional amount that she needs to pay before. The additional amount that she needs to pay before the 19th is what? is 300. That is payable before, payable by. The word by is used to mean as you extend to that period. And so when we say payable by, it means payable as we extend to the period of the 19th of September 2013. How much is that? That is 393.72. Okay, and so the additional amount is 300.72. Yes. Now the next question is asking for oh, that is question what? Question 2.4. Right away. Now, this question 2.4 reads, if Mrs. Y wants to pay her invoice in full, everything at once, what is the total amount of money that she owes, that she has got to pay? Now, notice that the total amount of money that she needs to pay is going to be the amount of money which is immediately required plus the additional amount of money. And so we say the total amount of money in this case we calculated after adding the immediate payment. And what is the immediate payment? It's 1,683. Okay, so onto this immediate payment, what do? We add the money, which is the additional amount of money that she has got to pay. So when we do that, when we add these two, the immediate amount of money plus the additional amount of money, we get the total amount of money, which is what? Which is supposed to be paid by this lady, Mrs. Guay, in total or in full. Okay, now we can add this amount of money using our calculator. And so the first amount of money is how much? It's 1,683. Onto that we add 393.72. Now when we add these two, what we get is 2,076.72. That is 2,076.72. Well, that is what she is supposed to pay in total. And notice that it is indicated here. We really did not need to put in our calculator to add the steps. The total amount of money have already been indicated, so we just needed to do what? To copy. So this is the total amount of money that she needs to pay, also known as total liability. Well, we seem to have extracted a lot of information from the invoice already. Let's now see the next question. What do you think? Now you see, this question is now about thinking. Very much like we are not going to copy right away. We are just going to look at what we already have and we think. So what do you think the amount due if payable in cash? Or rather, why, not what? Why do you think the amount due if payable or if paying in cash or with cash differs from the amount if not paying with cash? So the question is very much like, well, why is there a difference? Let's look at this. So they're saying here, amount due if not paid in cash. This is what? If not paid in cash, you are going to pay this. That is 2,076.72. But now if you are paying in cash, the amount due, is 2076.70. So you notice the only difference is that they have removed these two. The question is why? Well, now notice that these two standing at the end here is in cents. So it's like 2 cents. And unfortunately, currently, we don't use cents in South Africa. We only use, rather, we don't use 2 cents. We do use cents, but we don't use 2 cents. At least we start with what? 10 cents. 5 cents is not a common one equally. It's no longer easily available to find. So we would like to start with 10 cents. So the money or the smallest denomination right now here in South Africa starts with 10 cents, then 20 cents, 30 cents, 40 cents, 50 cents, like that. We no longer have 5 cents in use. We no longer have 2 cents in use. And so if Mrs. J. Gwai is paying in cash, that means she will be short. She will not be having the 2 cents to pay. And so she will only pay 2076.70. Okay, that would be the explanation. The explanation is that the 2 cents is no longer in use in South Africa at the moment. Okay, so what's that question? Well, that's question, that is question 2, rather question 3 here. So question 3, right here, requires us to think. And so the first part of it, oh, no, let's just put like that. There is no need of, it's not broken down. So we just say the 2 cents, or we just simply start with it. 2 cents is no longer in use in South Africa. 2 cents is no longer in use here in South Africa. And that is the reason why there will be a difference. The difference is only that 2 cents. Okay, it's no longer in use in South Africa. But notice that this money, which is 2 cents, is going to be carried forward. It's not removed. It's not like the government is or the municipality is saying, all right, now since we don't have 2 cents, you know, you have a free pass, please go ahead, pay only what you have. We are not charging you anything else. No, it's not like that. The fact on the ground is the 2 cents is still very much needed by the municipality. And it will be carried forward into next month's bill. Well, the last question this time being, the total amount due, which is total liability, includes 14%. Oh, all right, this is not 14. Let me just, okay. Oh, it's not appearing nice. I want to write something here. Yeah, it includes 14%. That is the total amount due, or the total liability includes 14%. But that percentage is not listed separately on the invoice. Calculate what 14%. Calculate what 14% of the total amount due is. Okay, here they're saying the total amount due includes 14%. Okay, it now includes 14%. What is the total amount due? Well, let's check. Total amount due, or the total liability. Total amount due is also known as total liability. Okay, so the total amount due is this, and that it now includes 14%. So what is going to be 14% of that? Well, we calculate that 14% of the total amount due. Well, 14% is the same as 14 divided by, 14 divided by 100. That is the meaning of 14%. But this time it's going to be 14% of some amount of money. And how much is that? That is the balance due, which is 2000 and what? 76 point what? 0.72. And so how do we calculate that then? Well, calculating this will give us the total amount, which is the 14%. So the 14% in this case is going to be, right away, this will require us to have the calculator. This is 14%, that is 14 divided by 100, which gives us 0.14. Now, to that, or with that, we multiply 2076.72, and that gives us 290.74. So this is going to be 290.74. Yes, this is how we do the calculation. Now, notice that this calculation or this topic of financial documents and tariffs, it requires a very good understanding of these terms, a few of which we have seen, being the bills, which we said is a document which includes or on which the things you have bought, the goods you have bought, the services you have, received is written, and also their corresponding what? Prices. So you have paid electricity, it's written down. You have paid water, it's written down. Phone bills, written down. You paid for waste, written down. All those stuffs written down on a document, and the corresponding charges also written down. When you receive that document, that is called a bill, and it's also known as an invoice. Then the next is called the credit. Now, credit is used to refer to a deposit made into an account, or some money has been transferred into your account, or money has been put in terms of loan or what, for as long as there is some additional amount of money put in your account, that is called a credit. The opposite of a credit is a debit. A debit refers to the amount which is removed from your account. Sometimes it's removed because you're buying something. Sometimes it's removed because you're doing what? You're possibly kind of paying back what you received. Sometimes you are helping a friend, like giving them money. In that case, money is withdrawn from your account, and that money is called a debit. Then there is what we call a debt. A debt refers to having to pay someone. Okay? So if you borrowed some money, you received some service. Okay, maybe you took your car to the garage and it was repaired, but you did not pay for it. Now, when time is appropriate, you have to pay for that. That money you have to pay is called a debt. Then the municipality bill is due to the services offered by the municipality. The services offered by the municipality is a lot. Not all of them is charged. The few which are obviously charged includes the electricity bill. Okay, the electricity, that depends on how you have used electricity, and obviously That also depends on the machinery you have in the house. You know, sometimes you have a lot of equipment in the house. That means the electricity bill will be high. If you have got less equipment in the house, the electricity bill will be low. Also, the issue of water. You have many people in the house, you know, you have a big family, water or much water will be used and you will pay more money for that. You have few people in the house, less amount of water is used and you will pay less for that. Okay? Then also the phone bills and things like the internet bills and stuff like that. Those are some of the things. You can talk of waste. You know, you have many people in the house, they eat a lot, you know, there is a lot which is disposed of, and a lot is disposed of, a lot has got to be taken away by the municipality. And obviously, that means more people in the house, more money to be spent. That does not mean you should chase off people from your house. It only means you have to find a better way of what? Covering the cost. So this is our introduction to financial documents and tariff systems. Now, after this introduction, we will be having a discussion again on how or what is the next thing which comes after the introduction concept to what? To financial documents and tariff systems.